Hello everyone, it's good to have you with us today. I'm sure you've heard the popular saying, don't put all your eggs in one basket. Yes, you heard me right. The topic we are talking about in this video deals pretty much with that principle of not putting all your eggs in one basket. We're talking about how to diversify your investment portfolio. It's important that you understand the strategy of diversification. It's one strategy that companies use, individuals use, corporates use to ensure that their investments are profitable, their investments are risk mitigated, their investments deliver on the outcomes that they desire. So by way of definition, diversification is putting your investment in asset classes that are not strongly correlated. What this means is that your assets, the assets in which you are invested, are not affected by similar circumstances. Let me give you an example. When there is forex volatility, some businesses are more affected than other businesses. The high inflationary trend affects a lot of businesses, but truth is, some businesses are more affected than other businesses. So when you're doing investment, you need to take some of these factors into cognizance and deploy your assets in a manner that all your investments are not affected by similar circumstances. If you do that, your investments will stay safe and your returns will be almost guaranteed, even if there's any dip in any sort of the macroeconomic factors prevailing around the particular asset class you have invested in. I believe that point is quite clear. So our particular emphasis in today's video is on how to diversify your portfolio in the stock market. Our emphasis today is on the stock market. Now, we're looking at the Nigerian Stock Exchange, or what we call the NGX, as a particular point of focus. The NGX has about 12 sectors or 13 sectors, depending on how you choose to number them. You have the financial services, you have the services, you have oil and gas, you have natural resources, you have construction and real estate, and on and on and on and on. Now, when we talk about diversification, let's give an example with the oil and gas sector. Some of the companies in oil and gas are into what is called the onshore side of business. So they own oil rigs onshore. When we say onshore, in the ocean, right, on the water body, and then they drill petroleum products. A good number of them don't have refining capacity locally, domestically. So those of them that are on the onshore and the offshore, right? Those that get their products from the sea, the raw products from the sea, they go to refineries and blend those products and refine them and bring them back to Nigeria to feed the downstream sector. When we talk about the downstream sector, we're talking about the people that market petroleum products here to local consumers and what have you. Now, a company that operates on both sides of the divide will be affected by the coming on stream of Dangote refinery. Okay, their downstream business will be affected by the coming of Dangote refinery if Dangote refinery's prices are more competitive. So if you are invested in a company that is doing both offshore and downstream business in the oil sector, you want to make sure that you are mitigating your risk by making sure that the coming of Dangote does not significantly impact on the income, the revenues, and the operations of that particular company where you have invested in. So this is one example of how macroeconomic environmental factors can influence a particular business and its operations. Okay, so if you are buying stocks, for instance, you don't want to buy stocks in companies that are doing only downstream business. You want to make sure you have stocks in other sectors of the NGX. So whatever shocks may arise in the oil and gas sector, your investment in other sectors, maybe in the financial services, will help you to mitigate the shocks, the downturns that may arise as a result of that. Let me give you another example, but I'm going to use a foreign context and I'll come back to our Nigerian context. Recently, we saw the release of the Chinese AI platform called DeepSeek. And American tech companies in a few days lost over $1 trillion, about $1 trillion in market capitalization. That was a very huge shock. So people who do not have diversified portfolios would have really suffered a lot of losses in the stock market. So this is one classical example of how a disruptive occurrence in the industry, in a particular industry, can affect that industry and then affect those who are invested in that industry. So diversification is not a luxury, it is a necessity in the world in which we live today. So coming back to Nigeria, which is our point of focus, what are the standard, or let me say standard, what are some recommended diversification strategies you can have? Many of the industries that make up the NGX are very good, they're very stable, they have good payouts, they have good return on investment. I'll recommend, as someone that would advise on the stock market, you can have a cocktail of shares and do oil and gas. You can do financial services. You can do, within the financial services, you can do banking. The bank stocks are doing very well. The insurance stocks are also not doing badly. You can do financial services. Then real estate is another booming sector right now. Real estate is another booming sector. In fact, a recent MBS report that came out says that real estate has overtaken oil and gas as one of the largest contributors to Nigeria's GDP. So you want to play in that space. So there are companies that are playing in that space. They are listed on the stock market. You want to own some investments in those kind of places. Now, real estate businesses are affected by forex volatility, but not to a very large extent as some other businesses can be. Why? Because the raw materials you use in producing construction equipment are mostly imported. A good number of them are imported. However, cement is produced locally, but some of the other things you use in construction are imported. So you can have some small influences of forex volatility on real estate, but it's not a very significant effect, because the bulk of the resources you need to set up structures, to build houses, if you're doing commercial houses, real estate, you're doing commercial buildings, maybe office complexes or residential property, you need block, you need cement. And these are the bulk of the raw materials. You need sand, you need plaster sand, and laterite and all of that. Most of these things are sourced locally. So it is mostly in the finishing that they use imported items. So that tells you why I feel that the real estate sector is one sector you want to play in. It's a very good way to diversify your portfolio. Another sector or industry I'd like to talk about is the consumer goods. We used to call them fast-moving consumer goods sector. These are everyday products that people use. High production costs affect some of those industries, but there are still a good number of them are still quite good. You want to play in that space. And then the last one I want to talk about is the industrial goods sector, the cement manufacturers and the likes. That's one place where you want to play significantly. I encourage you to acquire more knowledge, gain more insights. We have a very detailed video on the first steps you need to take to begin to play in the stock market, in the stock exchange. In case you've not seen that video, I encourage you to look up that video. It contains a lot of detailed instructions on how to start to play in the stock market, in the stock exchange, and make money from there. There's a lot of money to be made there, a lot of capital appreciation that goes on there, and all of that. So on that note, I would like to thank you for always keeping faith with us, always watching our content. We believe our content is bringing value, is adding value to you. Keep reading, keep studying, keep acquiring knowledge, keep knowing those ratios, and then you can look up our website where we can offer you one-on-one mentorship, coaching services on how to walk through the process of being a player in the stock market, earning money and all of that. So thank you once again for seeing this video, being part of it. And in case you've not subscribed to our channel, would appreciate it to have you subscribe. Please like, share, watch our videos, share with your friends and family, share with everyone you know needs to begin to make more money. Because the times in which we live, everyone needs to make as much money as they can to meet all their needs and obligations. So until next time, it's been a pleasure having you watch this video. Thank you and bye-bye.